What's up guys, Michael here. In this video, we're going to talk about why is it important to utilize your tax code as much as possible when you run a business. So this is a continuation of a vlog series where I show behind the scenes what's it like in running a business. So basically, there'll be less cuts, less edits, but I'll show you what's the life behind me, behind the camera, and more unedited scripts showing myself that, hey, you have to put in the time and effort to get to the point you are. So in this part of the segment, I want to really cover taxes, because first, it's partially my field, and at the same time is everyone has to pay taxes if you live in the States or any other country. But based on what a lot of people do and do not do is everyone has to eat. I recently made a video on eating. And when you eat as an employee, you cannot really write that off. You cannot spin that off and say, hey, I ate this meal, can I not pay taxes on it? Or basically use it as a deductible. In my case, like YouTubers in this case, if I own a business and it's registered with the state, and I have a business bank account, everything in receipts, I can utilize it. So while recording this video, always mileage I'm driving right now, because I made a Tesla video about supercharging, and currently my supercharger is not working properly. I had to bring someone in to fix it, 4.4 grand, and now I have to drive to a supercharger. But I refuse to use a more expensive one that's making me pay 50 cents even at off-peak hours, unfortunately. So I'm choosing a cheaper option because I'm a cheapskate that way. But at the same time, you can look at it depending what direction you want to look at it. Is I'm spending a lot more time, but at the same time, I'm using my time right now to record this video. And how can I use this leverage against taxes? For example, before I record this video and go out to go supercharge my Tesla, I decided to stop by McDonald's, get myself a Coke Freezy, and getting myself this is not healthy, to be honest with you, apple fritter. Basically a donut. McDonald's overpriced donut. So, getting this overpriced McDonald's donut, technically, I just got off of work, and based on part one, is considered as a business meal. So when you own a business, you can do a lot of things like writing off meals with clients, business meals. But in my case, in this category, they specifically looking for anything that you meet with clients. Basically, what I went out this late at night, why did I go eat? If the IRS asked me, or they do some type of audit, why did I go out to use my business credit card to buy McDonald's middle of the night? Then I can justify it. But if you're an employee and you just have your typical meal, you go out and buy something like this, you can't write that off. They won't buy it because they check out what you do. That's a huge benefit for businesses. And I made a bunch of videos about how the tax system is not really fair, and which makes sense, and which could be done better. You can charge more taxes, but make it more friendly towards individuals and other small business owners, and this will be one of them. So if more people had the ability to write off what they eat, then honestly more people would care about the tax code. But since not a lot of people notice, here's an example of them. And I wish that, most importantly, that the tax law and the code made it very clear, especially for people that do a lot of going out, meeting with people as a client, as a middleman connection. Because there's actually a type of job like that too, I've seen, which is pretty crazy, where they have to go out and eat, meet with random strangers, and try to build a relationship with them. And you have to explain it to the tax services, what is your job? That's the most difficult part. And when you see you have a lot of meals like this, every single day, a couple $100, then you have to explain to them. You explain to them, you get a receipt. When you get that receipt, you have to write down what was that meal for. It is super important, and there's a lot of people who negate that. Based on my experience, I'll say about 90% of my clients still don't do that. And I don't know whether it's fair from other people, and I try to explain it to them, that you have to write it down So just in case they come back and say like, hey, this does not match up with our data, then you won't have any complications. But some people just don't want to do it. So unfortunately, like, what happens if you don't do it? What happens if those clients don't want to do that? So in that one, you have a couple options. First, you don't sign off on their tax return. Second, you could sign off and you just give them the warning. Like, hey, they could come back and it'll hurt you. You'll pay a penalty or a fine because they don't buy what you say. And as for you as an individual watching this video, just keep in mind that a lot of people save money. For example, Jeff Bezos, back in 2018, they said he didn't pay taxes. And a lot of big YouTubers like PewDiePie, all these other big YouTubers like, oh my God, Amazon didn't pay taxes. No, that's actually not true. He is actually within the tax code. And of course, you can have the best tax people come out and nitpick what he did and say it's wrong and stuff, blah, blah, blah. But doesn't matter. In fact, whoever written the law, he's within the guidelines. And personally, from my understanding, if you're an investor and he paid you in like something in stocks, that would be even better. Because this mainly involves taxes, because stocks itself, as you can see, if you look at stocks back in like 2017, 2015, or in Bitcoin's case, 2011, if you held on to that right now, like you bought 100 shares of whatever corporation company, held on to that right now, or Bitcoin and held on to it right now, you know how much money you would have made? You might have made a ton. And if I'm not sure you guys picked up on video, I don't know why the city just turned on the sprinklers and watered half my car. Nice. Thank you, city. But going back on topic is how Amazon not pay taxes is they're really smart. They pay on them all out in shares and in stocks. And personally, a lot of people don't really put an advantage to that, unfortunately. If they held on to all those stocks and shares, they didn't need to blow on their money, honestly, those people would have been really, really wealthy. And of course, Amazon does a lot of shady things. I'm not defending them. There are a lot of things to improve, like their worker compensation and how much they pay and how they use the crap out of their workers. But that's besides the point. The point is, they're really smart. They have one of their best tax advisors with them. And when you run a business, you want to at least know the basics. For example, eating will be one of them. Your business expense will be another. Your food expense. Your food expense, keep in mind that food is getting more and more expensive. And I did make a video on that. And if you can cut back on that or only try to combine all of them to business meals, then it'll become a bigger benefit for you and your business. So as a beginning business owner, the best thing you can do is first understand the basic tax code and rule, and make sure to listen to your tax advisor, because a lot of people don't like to listen to their tax advisors. They like to, let's say, argue with them or give out an input that's not really smart. And let's be honest, there's a reason why they are a tax advisor and those people are not. So when a tax advisor, when you pay them really well, you can ask them really difficult questions, and most of the time they will answer you. And it'll give you a suggestion, and most of the time their suggestion is right. I can give that out from experience when I was in school learning from it, and currently now working on the field. So to break it down is always understand the tax code and rules and laws. So when you first start your business, you want to prepare yourself to find yourself a pretty good accountant. So in the beginning, that shouldn't be your first priority, but your first priority coming up after you start generating revenue is to find yourself a really good accountant, because they will help you out a lot in the future. And when they help you out, you can also find referrals too, because your accountant can also refer you to other business products and service that they may know. Because keep in mind, in the business world, it's a really small world. And what I mean by really small world, it's pretty easy to find other people that you have known from before, or maybe you know from school, and they suddenly pop up again. Now, when you deal with taxes, your best bet is to stay within the rules and regulations. If you try to do something in the gray zone, which is doable, is, for example, you don't want to pay as much taxes, so you find every way and advantage to levy it. Personally, I don't like to go through that route unless you're making, let's say, millions of dollars, maybe even tens of millions, and that's the time you can justify. You can start playing with the gray zone. But if you're making like $50,000 to $100,000, personally, I do not suggest you to play with the gray zone yet, because that one is a lot of headache. It's a lot of work for the accountant to deal with. And when you try to explain to them that, hey, I can do this, maybe this other person say they can do this, maybe another CPA say I can do this, you don't want them to bite back and audit you. Let's say they agreed that, hey, you can maybe move your money here from A to B, and it cannot be traced and it cannot be taxed, and this is not really covered on the law. Personally, I personally want to stay always in the good side. So in the good side and you don't have any problems, because in a business, your best friend is the least amount of problems. Because in business, problems always seem to appear no matter what you do or what section you do. For example, you're having a good day, your business is running well. All suddenly, client comes in, calls you, gets really angry. And in that case, it really costs you a lot of headache and time because you have to deal with that. And at the same time, if they get upset at you, maybe the fault lies with you instead of the client, then next thing you know, you blow a relationship. Sometimes relationships are meant to be destroyed, but if you can help it, you try to keep the relationship with your clients. And because when you build a lot of clients, you start issuing different forms, like for example 1099. If you hire a contractor, you can start contracting out work. That builds another relationship, because business is all about building chains and referrals and relationships. Keep in mind that business is a game of relationships. Whatever skill you have, you want to try to become better, but if you want to make the top dollar in any business that you run, it's all about relationships. And to build those relationships, you have to meet with clients and do your due diligence to show them, because people in the business world, people know if you really care about them. For example, when you do the work, do you basically call them, you keep up with them? And for example, if you hire an accountant to do your taxes, do you pay them in an efficient time and manner to make them remember you? It's like, hey, when tax day is due, do you make sure that you pay them on time? Do you give them all the paperwork on time? This applies to any business. And behind the scenes, a lot of people do keep that in mind, but a lot of businesses unfortunately don't practice that. Or maybe a lot of businesses start like slacking off because they make the money, they make the wealth, now they're starting to become really lazy. This is part 2 on how running a business behind the scene works, and I'll continue to update videos as long as they come along, mainly in the car, mainly at home. But it's to show an overview, a basically unedited version, or basically minor edited version of what it's like when you're running a business, from what's a day of a life. Because you see other people's videos and a day of their life, it basically shows them a day or two of what they do for that one day, but never shows extended period of time. This is closer to like a vlog, but explaining behind the scenes of when you're working. And when you're working, you can basically look at it as going to school. You have to go to school every day. You wake up. There are days you don't have the energy to do it, but you still have to go. The best way to do it is to spend it off in a way that you make it fun for that day, even if you don't give it 100%. So that's it for this video, and I'll see you guys next time.